Hey everyone, Alex LaRosa here, and today I want to talk about what's known as the triple tax advantage. When I refer to the triple tax advantage, of course, I am talking about the HSA or health savings account. And today I want to go over what an HSA is, why there's a triple tax advantage, and then I want to go over a few pros and cons of the account as well, and why I believe they fit perfectly in your financial plan. So first of all, what is an HSA? A health savings account is an account that you can put money into and use for qualified medical expenses. And you need to be enrolled in what's known as a high deductible health insurance plan. So check with your health insurance provider, check with your employer to see if you are eligible for that HSA. Employers typically will provide some kind of a match for any contributions. So again, reach out to your HR department, reach out to your employer and find out if that is the case. Okay, so the second thing I want to talk about is the triple tax advantage. So HSAs come with one of the best tax benefits for any kind of investment vehicle out there. And when they say the triple tax advantage, it's talking about the three components of the HSA. One is any money you put in is tax deductible, similar to an IRA or a 401k. So you're effectively lowering your total income for that year. So you're not paying taxes on any of the money that you put into an HSA. Two, the HSA, any growth inside the HSA account is tax-free. There's no taxes on gains. Again, similar to an IRA. Three, where this separates this from an IRA and a 401k is any funds used to pay qualified medical expenses, right? So, any health insurance or any health bills, hospital visits. It can be used for Medicare premiums and retirement. It can be used for COBRA premiums. Any funds, in some cases, I've seen it be used for exercise equipment. So, again, make sure you're using it for the right things and make sure you do qualify for that medical expense. But any funds used for that, you do not pay taxes on. So you're effectively never paying taxes on any of the money that's in that account that's used for qualified medical expenses, right? So that's why it's referred to as the triple tax advantage. And last, I want to go over a few pros and cons of the account. So there's a lot, in my opinion, there's a lot of pros and there's very few cons, right? So one of the pros, obviously, it's for high income earners who are maybe looking for a little bit more tax deduction. They're already maxing out their 401ks. This is just another tool to get a little bit more tax deduction off the top and help with deferring some of their income. Even for people that aren't high income earners, I believe, putting money into a tax deferred account that's allowed to grow for a long period of time, you're gonna enjoy the long-term tax-free growth, similar to an IRA. And another pro, like I said earlier, it can be used. We're all gonna have health expenses, right? I think odds are you're going to run into that at some point. Even the healthiest people in the world still have qualified medical expenses that they'll need these funds for, especially when you retire and you go into Medicare and some things are covered and some things are not. Prescription prices, anything like that. One of the another pro HSA accounts, most of them can be invested, right? So, check with your HSA provider, but similar to a 401k or a 529 plan, a lot of them will have investment options, and you'll be able to enjoy that long-term tax-free growth. Another pro is it's unlike the FSA, which is its counterpart, the flexible spending account. It is not a use it or lose it account. So an FSA, if you don't use the funds in it, they do not roll over. With an HSA, any funds not used, they continue to roll over year to year. I think that's a giant pro. And then another pro, let's go over a con, right? So one con I hear from people is, okay, what if I put money into it and I don't need it for qualified medical expenses? And yes, that probably can be looked at as a con. However, if you don't need it, it just becomes a regular IRA as long as you wait until that 59.5. Right? So anything withdrawn out of the account after 59.5, similar to an IRA or a 401k, it's taxed as income, right? But it's still money that you otherwise would not have saved, right? And again, I go back to this, odds are you're going to need it at some point. The contribution limits for these accounts, they vary every year. Currently for 2022, it's $3,650 for individuals and $7,300 for families. There's also an extra $1,000 catch-up fee for those 55 and older. So again, I believe that HSAs play a huge part and they're a very important piece inside of your financial plan. I would check with your advisor, I would check with your planner to see how that fits in your overall plan, how it can achieve your long-term goals, and how you can best utilize these accounts for that triple tax advantage. If you have any questions, feel free to find my contact info in the description or on my YouTube page. Reach out and I'd be happy to discuss it with you. Other than that, everyone have a great day.